Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. No real surprise in the end from the Fed Reserve in the US. They valued 9 to 1 to keep rates on hold and in that range of 225 to 250. What was interesting though was they've reduced the inflation projections going forward down from 1.8 to 1.5. That could be the sort of catalyst for the rate cut later in the year. So certainly the US economy, it's pushing on at a pretty reasonable rate. It certainly has slowed a little bit in the last couple of months. Some argue that that's a sort of a byproduct of the ongoing trade dispute between China and the US. Plus, them not being helped as well by President Trump sort of announcing that he might be putting tariffs on various countries and then sort of rescinding them and then putting them on hold, etc. It just brings a little bit of nervousness and uncertainty into the US economy. Just on the back of that, surprise, surprise, this week President Trump announced that he'd had a very good conversation with President Xi, and they were looking forward to having a good and productive meeting now at the G20. But also as well, the trade negotiation teams were getting ready to start talking again immediately. Now, as discussed here, both sides really need a deal. Certainly China needs a deal. Also, the US needs a deal as well. And, certainly the US farming sector and agricultural sector are doing it pretty tough at the present. Now, President Trump has also announced this week that obviously he will be running for re-election in 2020. Now, if you were cynical, you would say, okay, so he's made his announcement on his run for re-election. He's going to get the China trade deal done. That should boost the economy. If you get a rate cut as well from the Fed, it's also pointing to a pretty robust and growing economy going into the election in 2020. Interesting looking at bond rates in the US now. That 10 years backed up quite a bit. Obviously there was quite a bit of concern last year when it sort of breached that 3% level. It's now back around 208. Potentially could get up to around sort of 220, 230, but probably doesn't go much higher than that. And just interesting, obviously, before the G20, President Xi has announced that he will make a trip to North Korea as well. Again, if you were cynical, you would say, potentially sort of playing a few mind games before his meeting with President Trump. He's getting in there, meeting again with North Korea, Kim Jong-un. Potentially that was the, sort of great relationship that, again, President Trump had. Oil's come back a little bit, starting to recover a little bit of lost ground. Certainly got pretty hammered in the last sort of 2 to 3 weeks. But also as well, obviously you've got rising Middle East tensions as well. With the Iranian situation and the two oil tankers that have had a little bit of mishap out there. Now, obviously, the blame game has started. The US is saying it's definitely Iran. Iran is saying no, it's not. So it's just going to be a question how it's going to play out. But certainly just adds to the tension out there. And, Middle Eastern tensions are certainly rising at present. Interesting in Australia after the recent rate cut. Still potentially looking for a further rate cut in July as well, about a 60% chance. Rates are already at 1.25. If you cut them again, that would take them down to 1%. In the UK, the ongoing voting process to elect the next leader of the Conservative Party and then the Prime Minister. Boris Johnson's obviously the clear leader. But interestingly, in the second round of votes, he only picked up around 12 votes. Rory Stewart was the biggest gainer. He picked up 18. So it's just going to be interesting to see how this does play through as the sort of, candidates get knocked out at each sort of round, where those sort of votes go to. And just possibly Boris Johnson might not be the shoo-in everyone thought he was. But even so, once you get a new leader, the issues with Brexit haven't changed. Here in New Zealand, after the surprise rate cut, taking the OCR down to 1.5, still talk about a potentially lower rate still towards the end of the year. Now again, if you look at it on the global scale, New Zealand 10-year rates are 1.8, in the US they say around 2.08. But the cut in interest rates in New Zealand and also in Australia as well, really should underpin the housing market. And certainly for borrowers, it's pretty good. Obviously for savers and depositors, it's not such good news. Now, if you are looking for income options, so there's plenty of alternatives available out there. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. You need to be checking those KiwiSaver balances as well, just to make sure you've got the maximum contributions to get the maximum tax credit. Say if you're unsure on what those levels are, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.